Hello and welcome. My name is Natalie Smith and I am your session moderator. If you have any questions during the session, there will be time for questions at the end of the presentation. Please submit your questions in the Q&A widget. The slide pack is not downloadable, but this session will be recorded and will be available later today on demand. I would like to introduce you to Rupert Wood, Research Director, who will be presenting on full fibre, how we get to where we want to be. Over to you.
Thank you, Natalie. Good afternoon, and thank you for joining this session on full fibre. As Natalie said, my name is Rupert Wood. I'm a Research Director at Analysys Mason Research, and I'm in charge of the fibre infrastructure and wireless infrastructure programs. So it's become something of a cliche that COVID-19 pandemic has shone a spotlight on the need for robust connectivity. Demand shifted quite dramatically to fixed connectivity, in particular to residential broadband, as people were locked in their homes. Some of the anecdotal statistics from service providers over that period have been astonishing. Here are two of my favourites: a 300% increase in 1 month in uplink traffic on one European network, and one UK service provider recording a monthly average of just under 1 terabyte per month on fibre. So as a framework for what I'll be discussing, first of all, what we want. By we, I mean the public, businesses, governments, all stakeholders. Not just then this is not just bandwidth, but equality and ubiquity of access to gigabit internet access, and even more, networks that are robust and resilient, that are future-proof for anything nature might throw at us, or for future services. And secondly, what do investors and operators want? Well, what they want is first of all fast rollout. There's an urgency when there is a huge first mover advantage in rolling out networks with a high capital cost. But they also want some mitigation of risks, especially that of overbuild. This presentation will give a view of the FTTP market globally, as well as a bit of a focus on Europe, which is where the greatest activity is at the moment, and how the structure is changing and how business models are changing, and how we might get to this promised land of equal access, reliability, robustness, future-proof services. And a quick reminder about the terminology I'm using here. We at Analysys Mason use the term FTTP, fibre to the premises. This means full fibre, whatever the technology that sits on it, whether that's GPON, XGS-PON, point-to-point, etc. Many people use the term FTTH. We just think FTTP, fibre to the premises, is a more accurate term because it isn't just about homes, it's about businesses too. So let's start with demand. On the left, a view of Europe, and on the right, a global view. Of unique premises passed, the take rate in Europe is now about 40%, and it's picking up nicely. Remember that in most of these areas, cable also offers a gigabit or near gigabit alternative. Now, the fact that take rates don't grow much in a year, so we think they didn't grow that much in 2019, or even possibly go down, can be a factor of rapid expansion of availability. Now, there's major variations between markets in the phasing of supply and demand. In the Nordic region, the take rate can be well over 50%, in provincial Norway as high as 75%, but it's significantly lower in other markets, and that's a matter of phasing. But remember that the take rates can go down. That doesn't mean the demand is going down. It just means that the supply is outstripping demand. So I think, overall demand is good and promises, on the basis of what we see in some of the more advanced markets in Europe, to be very good. And from an infrastructure investor point of view, FTTP is now considered a safer bet. And I think it's interesting to see that infrastructure investors are sort of moving into this market and see FTTP very much as part of the safer bets now, rather than a riskier long-term bet. Looking at the world situation, the global situation, demand is higher still. It's around 60%. So in other words, it's of 60% of unique premises passed. 60% of unique premises passed actually take a service. But we have to understand that this is a massive impact of China on the numbers. China already has very high coverage. In fact, it accounts for almost half of the global availability of FTTP, and nearly all fixed broadband in China is now FTTP. There had been a little cable broadband in China, and other FTTXs have been very largely replaced. The fact that global take rate is falling in 2020 is nothing to do with ebbing demand. Again, it's just that the rest of the world and the availability is catching up, and that will inevitably dilute the figures for a short time. So if we look at availability, premises passed that is, on a global basis, we see this Chinese phenomenon very clearly. That top line there is Chinese availability of FTTP across the whole of China. And remember that these numbers are for FTTP, full fibre only. They exclude FTTP with LAN cabling, they exclude cable, and they certainly exclude other FTTXs. What we also see in terms of availability is some very strong growth and predicted growth in some global regions, in particular in Western Europe, but also in emerging Asia-Pacific and in Latin America. And in emerging Asia-Pacific, the actual absolute numbers there are significantly higher than Western Europe, simply because there's a higher population. And it's also good to take a global perspective on active fixed lines worldwide. And there are three things to comment on here. This is the diagram on the right. First, whereas mobile penetration is saturated almost everywhere, fixed is actually growing, and growing quite fast. In fact, for many operators in emerging markets, fixed, and this means FTTP in practice, is an engine of growth. It demonstrates real organic growth and compensates for the secular stagnation or decline in mobile ARPUs. And it's worth bearing in mind that in emerging markets, residential fibre access is a brand new service. It's not an upgrade from an old one. These operators are not defending a fixed line market, a copper fixed line market. They're attacking new opportunities with customers that are, by and large, still mobile only. The second thing to point out is that actually copper lines, and by copper lines I mean here voice-only lines, ADSL, VDSL, GFast, all the copper technologies, represent now only about a quarter of active fixed lines in the world. That's something that can sometimes come as a surprise to Europeans. And third, FTTP is already over half of active lines globally. So we expect this to continue to grow, and there are good signs that the fixed line market is far from saturated. So there's also, I think, very little correlation between FTTP coverage and investment and income levels. So on this graph, from left to right, we have declining GDP per capita, so wealth. Norway on the left, it's a very rich country, and then India on the right-hand side. And these are just the larger markets we look at. We, in fact, look at about 60. On the y-axis, I should say, we have the actual and forecast coverage of fibre to the premises. And you can see that there's actually very little correlation between those two. You can have some countries on the right-hand scale that are have very high numbers for coverage, and some on the left, which actually we have quite low predictions for coverage and growth of coverage. But I think gone are the days when we thought of FTTP as a nice-to-have service for people with higher incomes. And this is important for understanding the role of fixed wireless access. There's a lot of interest in fixed wireless access at the moment, as there always is with the new generation of mobile technology coming along. And given the fact that 5G is here, there's an uptick in interest there. Now, the ratio of capex to expected ARPU is actually better in many urban low-income markets than in rural or suburban high-income ones. So we would say that the business case for fibre to the premises is actually pretty good in some lower or lower middle income markets, I should say. And low income markets with heavy and fast growing mobile usage on 4G will have far more capacity constraints on general purpose public mobile networks than European or US operators on 5G. So investment is rising, but it's also proportionately, interestingly, rising to alternative operators in Europe, but also globally. What's more, we can see the effect of infrastructure competition, of overbuild in effect, because the sum of premises passed is some 15 to 20% higher than the total new unique premises passed. So in other words, some premises are getting more than one fibre infrastructure passing them. Now, we don't expect that proportion to rise significantly. In fact, globally, it might actually fall back a little bit, simply because we see that as markets mature, we tend to see overbuild being replaced by, in effect, agreements, fibre access swaps between operators that are built in separate areas. Investment in dollar terms has also risen, but not quite as fast as coverage, and that's an indication that there's a numerical shift to lower cost emerging markets. Now, that investment may well peak next year, but that should not deflect from the fact that there's actually still very strong growth. One of the factors that appeared to hold up FTTP in Europe was the time needed to roll out networks, a construction capacity constraint. Now, perhaps this has been overstated a little bit, and we can see that, for example, in Spain, an early mover peaked at around 5 million, but Spain had some structural advantages in the sense that there was a very clean duct system that allowed rapid build. But the run rate in France is now over 5 million per year. And I think now we have to wait to see what later moving markets like the UK and Germany can do as well. Now, the economic impact of COVID-19 might actually alleviate stress further as contractor costs may fall. So the supply of contractors may well actually become greater in an economic downturn. And, we may well see a sort of, a Keynesian approach, invest in a downturn in these heavy infrastructure projects. But European operators now face two cycles of heavy investment, that of FTTP and that of 5G. And these are in reality fairly distinct cycles, although there are some ways for smart operators to share some costs, although I think, to be fair, these are rather future-looking. 5G does benefit, or rather stands to benefit in the long run from more fibre, but I think it's a mistake to see fibre capex through a 5G prism. But this dual pressure means European telcos have higher capex intensity than their peers. It's around about 19% at the moment, as opposed to around about 16% worldwide. And this has led and continues to lead to some inventive financial solutions. So just let's pause on these inventive financial solutions. Infrastructure investors are moving into this market. We've seen this very, very markedly over the last 2 years, particularly in Europe. So what's drawing them in? Well, it's improving demand side factors for sure. That's why I started off with a slide saying, actually demand is pretty good on FTTP now. And there's that lure of the quasi-monopoly rent on unbeatable, defensible infrastructure, and that's resulted in this rapid rise of the special purpose NetCo vehicle. From the operator point of view, there's a desire to improve shareholder value by exposing netcos. That perhaps doesn't always happen. It doesn't improve the shareholder value unless there is actually a genuine spin-off and a purchase by a third party or an IPO. It improves utilization by opening access to all comers, where that doesn't exist already. It raises cash. It reduces debt. And above all else, it can simply accelerate the rollout where there's additional pressure to invest in 5G, particularly to pay for spectrum. And I think, from coming back to the infrastructure investor point of view, COVID-19 amplifies the demand for digital infrastructure projects. There's a restriction on what is sensible to invest in now. Nobody wants to invest in airports or shopping malls now. So on the basis of plans that we can see now, and that's not to say there won't be further plans of this kind or expanded plans, we expect 216 million sockets. That's roughly the sum. That's roughly the sum of all netcos premises passed by 2025. That doesn't mean 216 million out of about 260 million premises will have access to FTTP, because there will be some overbuild, but we expect 216 million sockets, and of those, if we measure this on an equity basis, about a quarter will be owned by other players, but by largely infrastructure funds, investment funds. If you add in utilities, who are another sort of major player in this market, we think that by 2025, at least 1/3 of all sockets will be in the hands of non-traditional players. In other words, players that aren't MNOs, effectively. So to expand on this a little bit, recent deals do expose the market value of a fibre premises passed. And this could be quite a lot of variation in this because of the perceived risk of overbuild or actual risk of overbuild, and likely utilization rates that derive from that are factors in the valuation. But we think somewhere between $800 and $1,200 seems about the sort of median range. For de facto monopoly or near monopoly retail plays, the valuations are significantly higher. Now, many have compared FTTP NetCo, that model, to the TowerCo model. They're very similar in many ways. They're passive, essentially bits of passive infrastructure which are rented out, and their valuation is very much dependent on their utilization. Hypothetically, and this is just a hypothesis, but netcos could be worth significantly more than towers. If you attribute a market price to self-supply, what is effectively self-supply in vertically integrated players, then that might be about twice as much. So the sort of fiber optical distribution network infrastructure might be worth, in terms of revenue terms per annum, about twice as much as towers. Possibly even more if that netco is delivering active access as opposed to just dark fiber access. So this figure on the right shows that rough hypothetical view of what the revenue base could be if everything was had a market value attributed to it for Europe alone. So, as I said earlier, overbuild, we think, tends to dissipate over time. We've seen this in the more advanced markets in Europe. Although where take-up is actually extremely strong in mature quasi-monopolies, it might arise again. So in other words, yes, you will see the risk of overbuild reducing as build moves out to more and more economically challenging areas where nobody wants to overbuild. But as take rates really pick up, then overbuild might emerge again as a possibility, but that's some way off. And an interesting phenomenon we've observed over the last year or so is that incumbents are more inclined, or increasingly inclined, to defend their retail base, by buying wholesale rather than attacking the wholesale infrastructure market. So we've got many examples of that, but particularly in the Nordic region, we've seen that happening for some time. We've seen operators buying from national broadband intervention schemes in sort of the more rural areas. That's natural, but we're also seeing established operators buying from altnets in some areas. Sometimes that's sort of in some ways foisted upon them by the regulation of the market, but in some cases this is entirely voluntary. And we expect to see more of that. And we're beginning to see some of that outside Europe. So in Saudi Arabia, there's a sort of mutual agreement, which was brokered by the regulator there, amongst several netcos to buy off each other at a bitstream level. Just saw the other week an agreement in South Africa for Telecoms South Africa to buy from an outfit called Frogfoot. And of course, there are in many countries large sort of national-based rather than just rural-based national broadband networks which sell to the former incumbents who are now without their own next generation fixed access infrastructure. So I think of Telstra in Australia, Spark in New Zealand, Singtel or Omantel, all buying from national broadband plays. So we have to say a word or two about fixed wireless access. I think the market for fibre, for broadband, if we just set cable to one side for a minute, is shifting very clearly away from copper, but fixed wireless access is still an option and a viable option. And it's worth bearing in mind or noticing that in Finland, Finland is often this sort of interesting, somewhat of an outlier market, very mobile-centric market. All three Finnish MNOs are now offering 1 gigabit per second 5G fixed wireless access on 3.5 gigahertz networks using 3.5 gigahertz spectrum. So that raises the question, why bother with FTTP? So just a few words about what they're actually doing. They're offering this in what I think some people describe as pseudo-rural use case environments. That is, single dwelling units in urban or suburban areas that are off any FTTP grid. And they're charging a one-off charge of €495 plus €45 a month. So if you if you sort of thought of that as a 24-month contract, that would be about €70 a month. And they always have engineered installed external CPE in order to be able to get that 1 gigabit per second to guarantee, or to provide a reasonable guarantee that they're really going to get that 1 gigabit per second service. In Finland, Finnish MNOs have a dense macro grid. They have, we think, about twice as many macro cells per head of population as other places in Europe. But it's also worth bearing in mind that one of those operators, Telia, is also building or co-financing FTTP to single dwelling units in similar areas to where it offers 5G fixed wireless access. We don't know whether it's the same areas, but it's certainly similar areas. So let's think about the advantages and disadvantages of FWA. On the positive side, yes, FWA could be upgraded with capacity overlay if there's suitable spectrum and if there is a need to boost capacity. At the moment, though, you're looking at largely empty 5G networks. And particularly empty networks, if there's an obligation to roll out 5G to areas where it's unlikely actually to be monetized through mobile particularly quickly. And there's a rapid time to market, even though you do need an engineer in installation. But what you don't need is demand aggregation in order to understand where there might be demand. And this could be, as I say, there could be upgrades with capacity overlay. On the downside, fixed wireless access will have higher OPEX than FTTP longer run. FTTP is far cheaper to run. There are far fewer moving parts, as it were. 5G is less predictable and probably less stable. 5G will certainly have much slower uplink. It will have, despite what people say about 5G, almost certainly will have higher latency, and it's significantly less energy efficient than FTTP in the long run. In the end, you'd say FTTP is designed, fixed wireless access is a solution designed for years. FTTP is a solution designed for decades, and eventually the total cost of ownership may flip. What we can also see is that FTTP is not a sort of static solution, as it were. It's a platform for competing technologies. Remember, FTTP isn't really a technology at all. It's simply a passive infrastructure on which competing technologies sit. And multi-gigabit, and there is competition and a variety of technologies that are beginning to sit on this, and multi-gigabit services are becoming mainstream. And we can see that there are major fixed operators with XGS-PON in their rollout. China Mobile, China Telecom, Openreach, Orange, Telefonica, AT&T, all got XGS-PON in their rollout. It's not just there for access; it can be there to backhaul other broadband technologies, GFast. It can be there to backhaul or fronthaul bits of mobile. But we're also seeing major consumer retail service providers offering multi-gigabit services. So Free in France, Enea Poland, Orange in France, Salt and Swisscom in Switzerland, and Xfinity, which is actually a cable operator in the US. So we're sort of seeing that the operators are going beyond 1 gigabit per second, and we can see that in the Swiss market, where there are at least 2 players that are offering this, that actually does have quite a significant impact on net adds, on retail net adds. Salt entered the market with an entry level 10 gigabits per second offer, and has been picking up subscribers pretty steadily, net adds over the last 2 years or so. And when Swisscom launched its own, it saw a spike in upturn. The unit costs have fallen for these higher speed PON technologies, and it's evolving all the time. So, we saw last week, 25GS PON is now being commercialized, and at some point in the future, we'll see 50G PON as well. So, the wholesale supply of broadband and fibre broadband is getting more complex. I've used this diagram a couple of times before, if you've seen any of my other webinars, and there are huge tectonic changes occurring in this market. The market is really getting disrupted. So I think what I want to draw from this is that the models for wholesale are changing fast, and they're changing because there are new financial vehicles being involved. There are new players entering the market. There are infrastructure funds, even perhaps more outside Europe than inside Europe, hyperscalers getting involved as well, creating these special purpose vehicles, these joint ventures. And the financial models they use for selling access to service providers are different. They will be IRUs, there may be access swaps, there may be some managed co-investment in there, as well as the sort of monthly charge per line. And the technical models are changing as well. So, the models range from layer 0 duct and pole access only to fibre LLU, dark fibre access, as it were. We might see wavelength LLU appearing. We've had bitstream for some time, but we might also see things which are sort of more, even more managed, as it were, so network as a service slicing and so forth. So there are a number of different models that are beginning to emerge, and it's becoming complex and disrupted. So I want to just look very briefly here at some of the models that are used, what is actually being offered by these new players. So, we might see actually some of these are not that new. The 2 at the top, Stocab and Netlink Trust, have been around for many years now, offering passive access, and there are some that are like the ones at the bottom there, DS Telecom and Nexera, which are sort of rural specialists offering a whole range of stuff. But I think one of the things that's actually worth pointing out, one, there's diversity there, great diversity of ways of selling access. But secondly, that layer 1 unbundling is common to most of them. And I think that may be what the market comes to expect. I just want to finish off by looking at two different approaches, which are kind of unique in their own way. The first one in France, and the French model has been a subject of some admiration from abroad. It's worth pointing out that it's a model that has been around for a while. It's sort of really established in, I think, 2013, but it's really beginning to show its value now in terms of what it can deliver. And this is that there is it's symmetrically balanced market, so operators have symmetrical obligations to one another. There's a mandated obligation on what's called the opérateur d'initiative, in other words, the first builder, to offer a co-investment option, to pause building before building, to offer a co-investment option in 5% tranches in all zones. How much they have to, which sections they have to offer co-investment in, varies according to geographic zones. It's only the very last in building section, largely in dense urban areas. But they have to offer that. So there's a sort of halfway stage between building your own network and renting from a third party. And what this has delivered, first of all, as we saw in an earlier slide, is a very rapid rollout. It's over 5 million per year. The run rate at the moment is over 5 million new unique premises passed per year run rate. But what's actually more remarkable, I think, in some ways, is that there are over 3 opcos on average for each line. So each line will have a choice of over 3 opcos on average. By an opco, I mean it has its own OLTs. So it controls its own actives on that passive infrastructure. And it's developed in such a way that a secondary wholesale market is emerging, where those opcos that put their own actives and co-investors are offering wholesale services, wholesale bitstream services, or resale services on tranches on those tranches of lines that they've actually co-invested in themselves. And there's a significant variation in technology on lines. In France, we've got GPON, we've got 10G-EPON, which is fairly unusual, and XGS-PON. What it actually hasn't got is a huge amount of retail choice beyond in that secondary market at the moment. But it is developed very much in the way that copper unbundling did. In certain respects, like copper unbundling did a few years ago. So one to watch, and appears to be very successful. And the last slide here is a model which is we've seen in Brazil, which is American Tower do Brazil, has started using software-defined access network slicing as a wholesale model. So American Tower is obviously largely a tower company. It has two sets of build in Latin America. One which it is a sort of co-investment or a franchise model, really, with Telefonica, but one which is actually is managing itself as a wholesale model and is open to all comers. So what do we think about software-defined access networks, access network slicing? That slicing has often been thought of as something that operators would do for internal purposes to segregate sort of types of traffic or even applications on their own network, but it can be used as a wholesale model. Is it the future of wholesale? Well, on the one hand, there's some good things to say for it. It's a programmable network which allows the operator, the service provider that sits on that network, a real freedom to define and deploy new services without investing in any of its own passives or indeed actives on the network. There's no slow ordering or provisioning process which might be associated with traditional wholesale models. And for what it's worth, there might be low exit costs as well for players that find that it doesn't work for them in one way or another. So in that sense, it feels, from the service provider point of view, it feels like you're running your own network. It's closer than ever to the paradigm of real-time network control, which is desirable. On the other hand, one might see it as a sort of bitstream on steroids. It's possibly in the FTTP world, especially when we think about residential FTTP, something of an over-engineered solution for a very simple problem, which is sort of someone of divvying up very large amounts of bandwidth over customers that probably aren't going to use all that bandwidth for some time. And I think at the moment the commercial terms of how that is paid for and on what terms that is paid for are still very unclear and frankly embryonic. It might be argued that because of that lack of clarity about the commercial terms, it might only be useful for niche players or microservice providers, and it might also, because of that, the somewhat opaque commercial terms, it might actually be something that appears only in low regulation markets, and might, in that sense, from a mass market service provider point of view, be further than ever, rather than closer to ever, to that paradigm of owner economics that they might ultimately aspire to. So just to wrap up with some recommendations, we think the market structure is changing fundamentally, and it's going to do so. We think it's, this is starting in Europe, but we think it's actually just beginning to impact the rest of the world. From a commercial point of view, coverage and utilization matter more than monetization now. There's a land grab there. And the market will come to expect, the service provider market that sits on this, or the OpCo market that comes to depend on this, will come to expect layer one access. Secondly, the post-COVID recession is a good time to invest. The cost of capital is lower, although it's obviously been quite low for a long time, and there are plenty of interested investors still. There are good Keynesian reasons for thinking this is actually a good time to invest. And in fact, we saw that last time in places like Spain and Portugal. The investment came started in the trough of the last recession. Thirdly, FWA, we think, is a solution for high-cost markets, not necessarily for low-income ones. It may also be a way to build a customer base quickly, but in many cases it still makes sense to deploy FTTP as a longer-term solution. So that's that. We think we have some time for Q&A now. So I'll hand you over to Natalie.
Thank you very much, Rupert. Yes, so we will now go to our Q&A session. Please submit your questions in the box on your screen or navigate to the Q&A widget. Now, we have already received some questions during the presentation, so I'm just going to look through these. Okay, so first question for you, Rupert. Where 5G fixed wireless access is available, will there be a case for FTTP overbuild?
Okay, that's a good question, and I had a funny feeling fixed wireless access might crop up as a subject. It's a good question, and I think if we, worth standing back from it a little bit. First of all, I think it's worth stressing that from a technology perspective, FTTP GPON is a superior solution to 5G fixed wireless access. It has, for several reasons, it has higher, better uplink. It's more reliable. FTTP as a sort of fibre platform has a sort of longer future in terms of next generation PON technologies and so forth. And it's also worth saying that, as far as we can see, 5G fixed wireless, that fibre to the premises doesn't suffer any kind of fixed to mobile or fixed to FWA substitution wherever it is. So yes, if you've already built it, then it looks like it's a winner, FTTP. Now, that doesn't get around the interesting question you've got there is, if there's already 5G fixed wireless in place, is it actually worth overbuilding? Now, I think it's I think there's a sort of simple retail problem there. One is, if a customer, an end user, has invested, let's say, that 495 euros in having an external FWA antenna installed to get 1 gigabit per second access, it's going to be a pretty hard sell in the longer run to say, don't use that, use FTTP instead. It's better, it's faster, but it's still going to cost you something to set up. So unless you can defray those setup charges, then that does become quite problematic. Having said that, we do see this example in Finland of an operator that is on the one hand offering FWA, 5G FWA in suburban off FTTP or FTTB grid areas, yet at the same time building FTTP in those areas. Now, we don't know whether, as I said before, we don't know whether those are the same areas, but it may well be that if it's the same operator that's actually being able to offer those services, it may well see that as the better, as the longer run solution, and so therefore might still build FTTP, but I think that retail problem of upselling gigabit FWA to gigabit or potentially multi-gigabit FTTP is still problematic.
Okay, thank you, Rupert. So we have another question. Where can 5G fixed wireless access challenge, and where is it the most appropriate technology?
Okay, so another one on FWA, but a slightly different slant. Yes. Okay, so when we've looked at the FWA market before, in studies we've already done, we've tended to look at it as basically two business models. There's one which is the challenger business model, an MNO coming in and challenging fixed players, and there's the other one which is effectively a fixed network operator model, which is to build FWA in areas where it's economically not viable to build FTTP. So in other words, in rural, low-density areas. On the challenger model, yes. I mean, you'd think from a technological point of view, you can see, from these services in Finland, even though they're on empty networks and they may not be able to sustain that 1 gigabit offer for forever and ever, that offers a faster service than any FTTX could. So in other words, anything other than full fibre. And yes, it can challenge there. Again, say for how long? Questionable. But certainly it can be a challenger, and I'd refer you back to the answer for the first question there. In terms of the fixed network operator model, this all depends on the willingness of co-investors or indeed governments to co-invest in FTTP in more economically challenging areas. We see the business case for FTTP getting stronger, and therefore greater willingness by commercial operators to invest further and further out than we did maybe 2 years ago. So that case for FWA becomes sort of slightly more restricted. The costs for FTTP tend to pick up very strongly, sort of in the last sort of 10 to 15%, and it's there where we see a good case for FWA, and indeed in the most remote areas we might even see LEO networks playing some sort of role certainly in high-income markets rather than in low-income markets. But I think I'd also like to emphasise on a more global perspective rather than that European answer I've just given, that FWA, the case for FTTP in low to middle income markets is actually pretty good in relation to when you look at the ratio between capex and expected ARPU and take up in those markets. So again, I think the general feeling is that at the moment that FWA is a useful model, is a useful technology for some areas, but it's actually quite restricted where it's most applicable.
Thank you, Rupert. We just have time for one more question. So how has COVID-19 impacted the business case for full fibre?
In many ways, I mean, there's some very direct impact. So sort of mechanical sort of impacts that rollout has been a little bit restricted, particularly in terms of actually delivering customer connections, because actually operators haven't always been able to enter customers' premises during lockdowns. But standing back from all of that in the longer term, okay, we can see that there has been a need for robust and future-proof networks, and there's shone a spotlight on the need for good connectivity, particularly in the home. But I think there's a big question mark here for policymakers, which I think there would be two things to say. One is, will they take the view that is good enough? If you see what I mean. So in other words, I think quite often policymakers on broadband have sort of taken a view on what sort of bandwidth, what sort of services people will be wanting on networks in a fairly short term, and they will model their response to that on that sort of demand side of what's good enough. And that has tended to deliver quite technology agnostic approaches. So it's not full fibre for everyone, it's gigabit capable for everyone, which is a significant change. But I think the other thing is, to what extent telecoms will be part of post-COVID recovery programs. Now, policymakers might take two radically different views on this. One, they might say, well, actually, telecoms is incredibly important. Telecoms networks and connectivity is incredibly important. And it's, we can see that it's even more important. The whole process towards a sort of digital sort of future has been accelerated by this pandemic. And therefore, it would be a good thing to invest in long term, and put some money in, to co-invest in that in those networks. On the other hand, they might take a view that telecoms network operators have actually had a relatively good pandemic, if you can say good, in the sense that they have been their revenues have been less affected than almost any other vertical you could think of, other than perhaps the pure digital, and that telecoms network operators can kind of look after themselves, and the market can look after itself in this respect. And I think that's still very much an open-ended question, and I think it's one that policymakers need to look at very much in the round.
Thank you very much, Rupert. Unfortunately, that is all we have time for today. If we didn't answer your question, Rupert or one of the team will get back to you soon. So that concludes day 1 of the Analysys Mason Telecoms Summit. Tomorrow we have a further 6 sessions, 2 keynotes, and another 4 concurrent breakout sessions. All of today's sessions will be available to watch on demand in a few hours. I would just like to say thank you very much for joining.